Wednesday, September 4th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I'm going to reference this book, Human Action, by Ludwig von Mises, and ask ourselves whether we are experiencing the crack-up boom, or as it's called in German, the Katastrophenhause. And yeah, I'll look into that and what that is. I'll look into von Mises and who he was. Very important figure of the Austrian School of Economics, of course. Before that, of course, I'll look into the markets, see what they're doing this morning. Yesterday was another very interesting day. The major indices dropped quite a bit. The Dow was down 285 or 1%. S&P was down 20, just over 2/3%, and the NASDAQ composite was down 1.1% or 88 points. We saw treasury yields drop again. The 10-year drop below 150 was around 147. We saw currencies move a lot, especially British pound, very volatile with the political situation that's going on as it relates to Brexit. I was looking at some charts yesterday of gold in euros, gold in Aussie dollars, and gold in British pounds. And I've shown you these charts before. I'm not going to show them again today because I'm going to focus on other things. But my wife was around and she saw those and she was shocked how those prices are going up almost in a straight line. They're making new highs, and that's why I want to talk about the crack up boom, because I think there's something wrong in the system. And yeah, so let's first look at the markets then this morning. It's 7:54 a.m. London. So we've got gold down $8. It's at 1538.50. The high yesterday was 1550. The high overnight is 1550 as well. So we know that that's the resistance right now. Silver, though, did very well yesterday. Was up over 3%. Traded above 19 and stayed there. And right now we're up another 10 cents at $19.35. So just want to show you this gold-silver ratio, which is really important. In the precious metals bull market, it's really important that silver leads the way. So this is how many ounces of silver you need for 1 ounce of gold. In the end of May, when gold started moving higher, you can see that this ratio is still going up. It was still almost up to 94 in the beginning of July. So that wasn't confirming precious metals bull market, even though gold had broken out. But look at it now, though. It's quite an amazing move. It's a huge move lower. We're even below 80 now, which historically is a key level. So that's the gold-silver ratio. Let's go and see what's happening in the stock market now. The Dow future is up 200, so it's gained quite a bit of its losses from yesterday. Still going to be very volatile in my opinion. S&P futures is up 23 or 0.8%. NASDAQ 100 futures is up 95 or 1.2%. So pretty firm this morning at the moment. Currencies, we're seeing the pound rebound. As I said, it's very volatile. We're back above 121. Yesterday we went below 120. So what happened last night in Parliament? Well, there was a vote to wrestle control of the Brexit negotiations from the government or from Boris Johnson by the MPs. They won that vote. And today, Boris Johnson will try to get a motion through that will call a general election. If he doesn't succeed, that means that the MPs will probably take control of the Brexit negotiations, and they'll probably delay it. They'll probably even stop Brexit. So it's all up in the air still here in the UK. It's a mess politically. But if you hold precious metals, you don't have to worry about it, in my opinion. Things are not perfect, but you can protect yourself, of course. So yeah, we're up 45 pips or 1/3% at 121.28 sterling. Euro is up about 9 pips at 109.82. Dollar is up 0.2% against the yen at 106.13, and it's down 0.2% against the Chinese currency at 7.16. Crude oil up 0.75%. WTI is at 54.20. Brent is up 0.2% at 58.43. So the 10-year yield right now is up 1.5 basis point at 148. The 2-year is actually 146. So the curve is inverted again there at 2s to 10s. And I'd like to also look at the yield curve for the UK. Amazing that there's a 50-year gilt and the yield on that is less than 1%. So that's how crazy this is. We've got the 10-year gilt at less than 0.5%. So this is a country that's running inflation at 3, 4, or even 5%. So investors are getting decimated by keeping money in bonds, especially government bonds. But a lot of the regulations, pension funds, force these people to keep policyholders' money in these securities. So I want to talk about then Ludwig von Mises, his opus, magnus opus, Human Action. It's a very big book, very academic. It's not a book that you start reading on the weekend and finish on Monday. You can read parts of it. You can reference parts of it. That's the kind of book it is. Before that, let's look at the Mises.org website. It's a website that I highly recommend. I've been looking at this website for as long as I've been researching gold, free market. Started looking at it back in 2000, 2001, Mises.org. My wife and I even went to the Mises Institute that run this website, the Mises Institute 20th anniversary conference in Auburn, Alabama, back in 2002. And that's where we met Ron Paul as well. He was there as a speaker. And they have a profile here on Ludwig von Mises. And I'll read it here for you a little bit. Not all of it, of course. So he was born in 1881 and died in 1973, von Mises. This is what the Mises.org website says. One of the most notable economists and social philosophers of the 20th century, Ludwig von Mises, in the course of a long and highly productive life, developed an integrated deductive science of economics based on the fundamental axiom that individual human beings act purposively to achieve desired goals. Even though his economic analysis itself was value-free in the sense of being irrelevant to values held by economists, Mises concluded that the only viable economic policy for the human race was a policy of unrestricted laissez-faire, of free markets, and the unhampered exercise of the right of private property, with government strictly limited to the defense of person and property within its territorial area. So that's his main philosophy. Small government, free markets, private property, sound money as well, of course. So I'm going to reference Human Action here today. It was written, first published in 1949, and specifically I want to talk about the crack-up boom, because I think this is what we're starting to see here. And before I go on to that section, I'll just read here in the back what people said about this book here. So, Human Action, the monumental masterwork of the grand old man of economics, considered by many to be the counterweight of Marx's Das Kapital. Human Action is the magnum opus of a genius. Ludwig von Mises is now universally acknowledged as one of the fountainheads of the worldwide movement toward individual liberty here in the classic defense of capitalism, whose impact and influence continue to grow. So this is what Henry Hazlitt from Newsweek said: if any single book can turn the ideological tide that has been running in recent years so heavily towards statism, socialism, and totalitarianism, Human Action is that book. The Economist from London: Human Action is a magnificent book. Intellectual power roars through it like a great wind. It has the impetus of first-rate polemic and the impeccable coherence of Euclid. Vermont Royster, Wall Street Journal: a storehouse of provocative ideas embracing not merely the socialist experiments, but the whole field of human action. It ought to be on the bookshelf of every thinking man. Rose Wilder Lane, Economic Council Review of Books: unquestionably the most powerful product of the human mind in our time, and I believe it will change human life for the better during the coming centuries, as profoundly as Marxism has changed all our lives for the worse in this century. That's the 20th century, of course. Murray Rothbard, who was also an Austrian school economist: Mises is the first to work out economics on a firm foundation on the principle of individual action. This is the economic Bible for the civilized man. So let's go to the section that made me think about what's going on in the bond markets, what's going on in precious metals. What we're seeing is a rush away from cash, especially with what's going on in monetary policy. So let's read here. This is from page 427 under indirect exchange, the chapter. And I'll quote von Mises: but if once public opinion is convinced that the increase in the quantity of money will continue and never come to an end, and that consequently the prices of all commodities and services will not cease to rise, everybody becomes eager to buy as much as possible and to restrict his cash holding to a minimum size. So there you go. Once public opinion is convinced that the increase in the quantity of money will continue to grow and never come to an end. Well, that's the extraordinary or unconventional monetary policy that we saw after the '08 crisis. I think we turned a corner on that just recently, when people realized that the Fed can't raise rates anymore. They have to start printing money again, not only the Fed but the ECB, because they have to keep going. It's inflate or die. And I think the general public hasn't realized yet. It's still early days, but I think that the smart money is realizing that this money printing will never be able to come to an end. So I continue. For under these circumstances, the regular costs incurred by holding cash are increased by the losses caused by the progressive fall in the purchasing power. Well, what that in this case, you've got the negative interest rates, right? That's the cost of holding cash. I wonder if von Mises would have ever imagined we would have had those. Anyways, the advantage of holding cash cannot be paid for by sacrifices which are deemed unreasonably burdensome. So this is the interesting part here. It says this phenomenon was in the great European inflations of the 20s. Well, that's the hyperinflation you had in the Weimar Republic, in Austria and other places in Europe, called flight into real goods, or Flucht in die Sachwerte, that's in German, or crack up boom, Katastrophenhause, which means a catastrophic rise, right? So that's the flight into real goods. The demand for cash vanishes, right? And that's what hyperinflation is. It's a loss of confidence in the monetary and governmental authorities that they'll ever be able to manage the currency properly, that they'll have to keep printing forever. And I think people are starting to realize that. He ends by saying, the mathematical economists are at a loss to comprehend the causal relation between the increase in the quantity of money and what they call velocity of circulation. So basically he's saying PhD economists don't understand that this crack-up boom takes place not because of measurements and like equations, but it's all in the human mind, in people's psychology, when they realize that the monetary authorities can never stop printing money ever. And I think that's where we are right now. That's why, yes, they are rushing into paper, which bonds are at the moment, but that's because it's government and they think it's safe. But it's driving yields to negative levels, and you can see the move into gold and silver now. I know the dollar price of gold is not reached the high from 2011, but if you look at all the other major currencies, we're breaking out. So are we in the beginning of this crack up boom? I think we are. I don't think the general public has twigged onto it completely, but when they do, it's going to be even more. I think it's something that we never experienced before. I guess people in the 20s in Germany and Austria did experience it, and it will be something that will many books will be written about hundreds of years from now, and they will say, in my opinion, that the '08 crisis and the central bankers, they were the creators of this crisis. So there you go. I highly recommend the book, Human Action, by Ludwig von Mises. Highly recommend Mises.org as well. They've got great articles there for you to read in their blog, and it's all free. If you enjoyed this video, make sure you hit the like button. Make sure you subscribe to the channel as well if you enjoy my videos. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.